Hi everybody, I'm Diane Brady. I am here with Rich Lesser, who is the Global Chair of BCG at the Milken Institute Global Conference. Nice to see you, Rich. I want to start with the fact that you are kind of the whisperer to so many of the leaders in the world, public sector, private sector. What's the mood right now in general?
Well, I think right now people are wrestling with two things happening at once. An enormous amount of uncertainty, and it just keeps coming. I mean, the banks...
More so than usual. Well, the banks, yes.
Yeah, the banks and the economy, and how fast can we bring down inflation, and war that's ongoing with very uncertain outcomes, and a rapid deterioration in geopolitical ties, particularly US-China. So uncertainty at many levels, coupled at the exact same time with a massive amount of change happening in the world, particularly technology-fueled change. AI top of the list, digital more generally, but even in physical technologies, nano and quantum and synthetic biology. It's rare. I mean, I've thought back over the last few decades I've had the privilege to be a part of talking to leaders. It's rare to be at this moment where you have so much uncertainty and so much change happening at the same time, and I think leaders are wrestling with that combination.
Is there a certain genotype that does best in this environment? Because you must give a lot of advice to people that they don't take, or that they do take, but people talk about resilience, and I mean, that's very 30,000 foot. What type of leader are you seeing who really is going to come out of this ahead of the curve?
So I think, let me break that into very short term and then the medium term.
Right.
In the very short term, I do think there's more of a premium placed on resilience right now, and a lot of leaders are trying to figure out
what does that look like?
What does that look like in today's world? What it looked like the last 2 or 3 times we've encountered this, to be blunt about it, was almost like a preemptive layoff mindset.
Yeah.
You're worried about your profitability.
It used to be redundancy was also.
Workforce reductions, RIFs, layoff, everybody had their own name.
Yeah.
But that was sort of the mindset. I think there's much more reluctance to pull as hard on that lever as there was before. It doesn't mean we won't see some. We obviously saw a lot in
the tech sector.
We saw some in tech that really overhired. If you looked at the rate of hiring in the recent past, it's pretty extraordinary. I think for many, they watch how hard it was to hire coming back from COVID. They see the skills gap that they're trying to fulfill. They realize the amount of retraining of workforces they will need in the future. And to go through all the loss of trust and disruption that comes, it's not saying they won't reduce workforces where they feel like they really need to, but that's not the first lever they want to pull. It's sort of in the middle of the list or further down. But that means you've got to do other things. You've got to really think about your portfolio and what parts are productive and how you allocate capital. People have made enormous investments in digital over this last decade. Some of it has yielded really good returns. Frankly, a lot of it has not yielded the returns that people want. And so how do you fix that? How do you change the spend rates? How do you drive higher returns?
It's hard to know what you're overhyping or underappreciating, isn't it? I mean, I know you can't talk about specific companies, but let's talk about sectors, and let's start with the tech sector. When I look at that overhiring and the now massively, is that a sign of just the maturity of the industry, or is it really just the nature of tech? Because it seems a little bit unique to
I
that.
think there is some industry maturity. It's a young industry. It's an extraordinarily self-confident industry. Sometimes thinks they're sort of kings of the world.
Right.
And their business between 19 and 21 went up like a rocket ship in response to COVID.
At all of our backs.
And you put all of that together, and I think there was honestly an exuberance that has proven to be irrational. You only know irrational looking backwards.
That's true.
But I think that is the nature of it. The flip side, of course, is I think many technology people look at this next wave of innovation coming, particularly as it relates to AI, and they're really quite energized about it. But I think particularly for the tech sector, some of that AI is going to be applied to writing software, a lot of it, or engaging with customers.
Right?
So that will not necessarily require the rates of hiring that I think they associated with past growth waves.
Yeah.
So the intersection of, I think, a really rapid rise in business and overconfidence, honestly, about how unique they were relative to all other businesses led to this. Now I think we see, some optimism about the longer term prospects, but likely with very different business models going forward.
Well, what about the banking sector? I mean, I know we've gotten past the conversation of this being like 2008, but we are seeing other parts of the banking sector that have gotten into trouble. Do you think that's going to continue, or anything that you're seeing? I'm not turning you into a pundit here on different industries, but very different.
I'm on the more optimistic side. I think there was rapid intervention. It's proving to be pretty effective. We haven't seen sort of the systemic issues that we saw, 12 or 13 years ago, 14 years ago. I actually am optimistic we'll come through this, assuming we don't need to keep raising interest rates dramatically, because I think that does put an underlying pressure in the short term. In the long term, banks love interest rates, you make money on it, but given the loan portfolios that are out there, whether it's treasury bonds or commercial real estate or other things, there is real pressure when interest rates rise suddenly. And you would think not unexpectedly, but I guess for some banking executives,
well, it was quite a big growth, in such a short period of time.
Exactly.
And when you do both the public sector and the private sector, especially with regard to sustainability, green, how much, given the politics and given just the nature of our country and others, how much is the public sector able to pivot in the same way that we have to see? Like, they need to undergo a digital transformation. They need to be doing a lot of these things. Is that happening, or what advice do you give? It's hard to give advice on a generic level. If they want good advice, pay for it. But in a general level, does it cause for concern or optimism?
So let's start. Change is hard everywhere, and change is particularly hard in the public sector. You have entrenched constituents, you have an entrenched workforce, you have political pressures that cause people to be more concerned about being called out for something that didn't go well than being recognized for something that does go well. So I think that it is very challenging. We have to separate. I think that the policy side of it, we saw more progress in the last year than I think any of us would have expected. Infrastructure, CHIPS, IRA are fundamentally shaping legislations, none of them perfect. You can always critique legislation, but really reshaping in my climate and sustainability world. I mean, I think IRA will be transformative in how companies view investment prospects, how it changes industry dynamics.
Because we have clarity? Is that
because we have money and we have clarity. I mean, giant carrots. Nobody likes sticks, and the U.S. government particularly doesn't like sticks, right, to taxation and things like that. But as a result, we've gotten very substantial carrots. And those carrots are reshaping of the economics of different value chains, whether it's auto or biopharma or other products that use hydrogen or metals or energy. And so I really feel like we're going to see substantial changes. The problem is the pace. Then you get into the inside government part, and that's tough. I mean, we need procurement in government. They purchase trillions of dollars across all the levels of government. Yeah. They need to be better at being smart purchasers that create incentives for more climate-friendly and nature-friendly products. We need a digital transformation in how government works. It's extremely hard for companies, even harder for governments. And so there's a lot of internal reshaping in the public sector that we are early on in that can have huge multiplicative impact between their buying power and what it means to be a citizen when you can, deal with your taxes more easily, deal with, getting your driver's license renewed more easily. You can really change the lives of citizens if government does it well. It's hard to do.
Is there anything that you're seeing on the global landscape, not just in terms of what's happening in other parts of the world, because I know it's very different, China, Europe, but a lot of the companies we talk to are, of course, multinational companies, and yet they can't really talk about it as much because it's become more sensitive. What would you be putting on that's on your radar screen you would put on ours in terms of what to think about?
The risk in China-U.S. relations, which we read about every day, and of course the biggest risk is a war or something, and we all are hoping that the two countries can work together in a way to avoid the worst outcomes. But the economic decoupling, the complexity that represents, the risk to the economies in both countries, and the degree to which it keeps getting tougher and tougher, people are really struggling. Behind closed doors, you're right, nobody talks about it in public. behind closed doors, virtually every company with a substantial position in most companies, which is nearly every major global company,
right,
is wrestling like, well, play out different scenarios and what do you do? And actually really unhappy that those scenario exercises don't yield outcomes that they're happy
they
with.
can't relocate their supply chain.
There's a dependency on supply chain in China, often huge
Rare
revenue
earths.
streams as well. And the US is obviously essential. And the degree to which you're being pulled apart by the governments, it's a really tricky time that everybody's trying to work through to act responsibly, be seen as playing according to the rules, but the rules keep changing, and sometimes the rules are in direct conflict. It's a hard time.
So I want to end, and please share any other things, but I think of BCG really as being best in class in the climate realm. You know, certainly I'm familiar with the work you did in Toronto and a lot of different places, and we do not seem to be moving at the speed we need to move at. How does this play out? I mean, when you talk to leaders, obviously there's so many forces now that make it easy to be distracted from, trying to reach a certain carbon target, et cetera. Is there anything that's going to move the needle, or are we just in a path that there'll be more consequences and at some point we'll have to deal with it?
So it's important to start with the positive side of it. Not because I disagree. The positive side is we're moving. We're moving. The number of countries that have made bolder commitments keeps going up. The number of companies that are signed up for SBTI for the industries where they can even do that, or showing other kinds of commitments keeps going up. The progress we're making on technology is real. The incentives now in IRA in Canada, in Japan, likely coming in Europe, and even what China's doing on many fronts to accelerate technologies. And we're talking really substantial changes. But then you come back to your statement, which is totally right. We're not going fast enough. And so the question is not, will we keep making progress? I'm very optimistic that we will. It's, what do we do to get to the next level of progress so that we can increase the pace? And that is the challenge in front of all of us. I'm pleased that some of the things that are happening on the transparency side, I'll be honest that there were big flaws I think I felt in the original SEC proposal. The European proposal is Europe tends to overregulate a bit. It was too far. But everybody's reworking those proposals. We'll see what comes out. The International Sustainability Standards Board has stuff. So we need transparency. We need bigger corporate commitments that go along with that. We need downstream companies to tell their upstream suppliers that they care. We're starting to see, there have always been leaders, the IKEAs, the Unilevers, the Nestle's, the companies, PepsiCo. Like, there are people who are on those journeys. GM is doing that. Ford has started. Like, we're just seeing more and more companies that are starting to push that. And we need many, many more. What Walmart has done on the Gigaton initiative, we need to flow across the entire retail space. So there are big changes that we need to see faster action, but we are making genuine progress, and it's dangerous when we're not getting anywhere, that people leave, well, it's insurmountable.
Yeah, it can induce an existential angst, can't it?
And it should be like, this is a problem. It's within our ability to solve it. We need to focus on the elements that will continue to make progress, and frankly, we've made good progress in the last year to do that.